I'm John Batchelor. This is the John Batchelor Show. Larry Kudlow of Kudlow Reports at CNBC and Kudlow Radio on the Weekend joins me looking at Crimea the day after Vladimir Putin recognizing that Crimea, after its referendum of several days past, is now an independent sovereign state. Will it be annexed? That is in the future. But right now, Crimea leading to the President of the United States within these last days sanctioning some parts of the Russian apparatus, 7 Russians and 4 Ukrainians, some parts. I note, however, that the markets the last days have responded in what you'd have to say is a sanctions rally. Russia's up. And the U.S. has not suffered. I'm looking at late European news tonight because the Wall Street Journal dryly says that the European partners on this, the EU, are divided on Russian sanctions. For example, just in case you want to know where the real enmity is in the world, it's France and England. They still think Bonaparte is loose. England tonight, Foreign Minister William Hague, I'm leaving out Scotland because that will be determined later this year. William Hague says that he believes France should freeze its sale of 2 warships to the Russian Navy worth $2 billion. He tells Hollande, give up on the $2 billion. The response from France is immediate, or as the Wall Street Journal says, shot back with a demand that UK banks seize or freeze assets of Russian oligarchs held in UK banks, since it's my knowledge that most of really good London real estate is owned by Russian oligarchs and their servants. Larry, a very good evening to you. I would say that, to be generous here, the market reaction to the sanctions list is not dire. In fact, it looks to be positive. Is this a non-event on the street, Larry? Good evening to you.
Good evening, John. Well, it's a non-event so far. I mean, it wasn't, but now it is. And there's 2 reasons for that. One is, so far, Obama or the EU, neither Obama nor the EU have invoked financial and banking sanctions, which I hope we'll come back to because those are quite substantial if that happens. It's going to upset and shock the whole financial system. Secondly, Putin's rhetoric, if you believe it, is suggesting that there'll be no military action from here. I suppose meaning East Ukraine or other places. But he said in his news conference today, or whatever that was, that there'd be no military action. So those 2 factors, the lack of banking sanctions and no military action, helped the market, helped it a lot yesterday, helped some today. By the way, Russian stock market, which is very much related as an emerging market, is up 8% in the last 2 days.
Let's talk about the Russian market. Since 1998, it's been difficult to focus on it because Russia has not been a hot topic for investment. But you on your show have developed some numbers about how much is invested in Russia, the interest in Russia, and also how much Russia has in Europe. What are the numbers, Larry?
Yes, two very important numbers. In Russia itself, investors have bought $325 billion of Russian stocks and bonds. This is over the past 4 years, and this is according to the Wall Street Journal. A lot of that comes from 2 giant mutual funds, PIMCO and BlackRock. Most of that, John, went into Gazprom, and Gazprom is a huge amount. It takes up a lot of space in the Russian stock market. It's obviously a state-owned energy company. So they bought $235 billion worth of Gazprom. They bought some bonds too, but principally they bought Gazprom. I think the more interesting aspect of this is the London story. The London story, which, if I get my numbers right, Russia really depends on the city of London for its financing. And here's where the rubber could meet the road if there are banking sanctions. Over the past 10 years, Russia has raised $400 billion in stocks and bonds on the London market. And in fact, a lot of these Russian companies are depository slips for the Russian market. You can buy them, depository accounts, they're called. So $400 billion. Last year alone, Russia raised $47 billion. And in terms of these depository slips, 70 new issues have been listed in depository receipts, and this is just in recent years. So, look, as a third world country, as an emerging market country, Russia is basically using London, not so much the United States, but London, to raise their money. And they need that money, John. They need that money desperately to finance these companies, most of which are state-run. There are some totally private ones, but most of which are state-owned. So if Obama takes the lead, finally, in going for banking or financial sanctions, if London stays with him on this, it's going to really close down Russia. And you'll see a reverberation where U.S. investors, as I said, like PIMCO, will pull out of the Russian home market in Moscow. And so that will cripple them and their currency will collapse.
My concern, Larry, we'll mention now Germany. Germany's the largest importer of natural gas energy from Russia, and the German banking is the backbone of what we have in the EU. That these markets are so integrated, there is no obvious way to sanction Russia without hurting our European partners. Certainly, the French and the English tonight trading barbs about who should give up what business suggests that they don't think they have anything to give away.
Well, it's interesting. Russia's largest trading partner is China.
Right. But
by a small amount. The others are in Europe. Netherlands, Germany is third, Italy is fourth. So the answer is yes. If you had trading sanctions, you'd have a tremendous amount. Now, the issue here, which I find fascinating, there's a lot of experts who say you could slap an import sanction, believe it or not, you could slap an import sanction on all Russian energy, and that Europe and the Ukraine would get through. Now, the Ukraine imports, 70% of its energy from Russia. But the argument goes like this. It's been a mild winter. A lot of inventory stocks have been built up, particularly in natural gas, which is the biggest import. And therefore, with spring coming, the Europeans and the Ukraine could survive this quite nicely. And I can just tell you here, too, like in financing from London, if you put a moratorium on Russian imports of energy, you are just going to damage Russia, because that's where their foreign currency, that's where their hard money comes from, and they would be absolutely crippled.
In 1998, dim memory, but it was a crisis, and it started with the Russian market collapse, the ruble's collapse. Is that not possible again, that when one market collapses, there's a domino effect among emerging markets? Russia is part of the BRICS. Are they integrated in some fashion where you can't punish one without punishing them all?
Well, they are. 1998 was the famous long-term capital explosion, this big hedge fund, and they had all their derivative positions in U.S. bonds and Russian rubles, and they guessed wrong on both sides. And the ruble did collapse and had to be rescued by the IMF and the U.S., ironically. But to your point about emerging markets, there is a certain systemic risk here, because a lot of these funds, John, BRIC funds or emerging market, BRIC being Brazil, Russia, India, and China, or other larger emerging market funds, have a pretty healthy share, about 4 or 5% from Russia, which would be one of the leading emerging countries in these funds. So, to answer your question, if the Russian ruble were to collapse, these funds would basically collapse. There's no way around it. Think of it as a money market fund, with corporate paper collapsing, then they would all go down. So, yeah, there's a risk here. And look, the ruble at one point last week was off 11%. Now it's come back because the hostilities have momentarily quieted down. Just as the Russian stock market at one point was off 27% last week. But that, too, has quieted down since the hostilities. And it's actually bounced back about 8% in the last 48 hours.
Larry Kudlow, CNBC's Kudlow Report. In sum, there is no in sum. The markets are sophisticated, integrated. There are unknown unknowns. And a bite out of Russian assets could come right around and bite us back. I'm John Batchelor. This is The John Batchelor Show.